Today, I'm going to break down 2 trade reviews that helped me make over $1,000 trading the markets today, and so that you can start implementing this into your own trading and start making profits consistently. Let's get straight into it. The 2 trades we did take were gold and the stock market, the US 30. We are going to look at both. Now, I get a lot of people reaching out to me asking me, hey, I trade the exact same methodology as you, but I'm having trouble. Can you please look at one of my trade reviews? And I look at them, and a lot of people are asking me these same questions. So, what I want to do is, if this video gets over 80 likes, I am going to sit down with everybody in my YouTube community, and we can have a kind of like a Wednesday trade review meeting, kind of like what we do with the Moneyball trading private group. But we all get together, we can ask questions about the trading methodology. I'll look at my trade reviews. It will be the exact same, but it will just be us. So if you guys would like something like that, please like the video and I will set that up so we can have a private meeting together over the next 2 weeks. I mean, because this guy reached out to me, and I see a lot of people making these mistakes, guys. I see a lot of people, and you're going to see the same thing that I talk about time and time again. This is a chart that some guy sent to me, and he's like, what do you recommend on this? He said, I told him, well, number one, this supply zone is not a tradable zone. I've made videos on this before. See, and it will be in the description below. The 3 things every trade, every zone has in common for me in order to take a trade. We're going to look at it here in this example in my 2 trade reviews. Prices never removed demand, it never broke trend, and we don't really know if it's in higher time frame supply. I mean, this is what people are sending me, and I'm like, you can't journal your trades like this and expect to have a proper review. Another question that some guy sent out to me earlier today is, hey, I've been watching all your videos, good arrival and a bad arrival. It makes sense to me about how we are looking for quick in and out trades. But he had a question regarding higher time frame trend. Is it better to be asking for more take profit and risking more in those types of trade? I I definitely agree. I think it makes more sense to actually go for more of a return on your trade if you're trading with the trend than trading counter trend. As well as, I think you could probably risk more if you have a higher quality trade setup than if you are trading a low quality trade. So I get these questions all the time. I want to set this meeting up with you guys. So if you guys would like this, 80 likes to this video, and I will set that up over the next 2 weeks. Let's get into the 2 trade reviews. The first one we are looking at is gold. And nothing to those guys. I'm not trying to call them out. They're trying to get better, and I am here to help them. So you guys can reach out to me anytime on social media at Moneyball Austin, Facebook, Twitter, Instagram. Ask me anything. Make sure to hit this like button and subscribe to this channel where we talk about the supply and demand methodology a lot. Okay. So let's get into it. Gold 4 hour time frame. This was kind of like a swing trade, but I got in and out within 24 hours. What I always do is I start with my higher time frame. I'm going to scroll in. So here it is what was this? $1,000 on this trade, quick in and out. Trading gold. Gold is my best performing asset, so I like to tend to risk a little bit more because over the last 2 years, gold has been my best trading asset pair. So it makes sense for me to focus on that and trade it more. So on this one, I really liked it. We started with the weekly time frame, talking about possible swing trading. We did a video on this last week, talking about day trading versus swing trading, how you can incorporate both. So here is price coming back down into higher time frame demand. So what I got to do is I'm scrolling in so you guys can see this a little bit bigger. That should be good. This demand zone right here on the weekly time frame. I start with my weekly time frame. We have prices coming into a weekly demand zone. This is a weekly rally-based rally demand zone. That is a tradable zone. I uploaded a video on this a while ago and I mentioned it earlier. What makes a quality tradable zone? Number one, did it remove an opposing zone? Yes, it did. It did remove an opposing zone. Number two, does it have a strong 2-to-1 move away within the first 1 to 2 candlesticks? Yes, the first 2 candlesticks, it went over 3-to-1. So that's telling me a lot of buyers stepped into the market during that time. So if and when prices return back into this area, I want to be looking for buying opportunities. So that's what I did. Prices came back down into this tradable weekly demand zone, which is really important because it helps us increase the probability of our trades. And I see people make this mistake all the time. And I'm going to look at, say, 20 different trades. I want to look at 20, 30 different trades in a meeting with you guys. So like this video, we get it to 80. I'd really appreciate getting over to 100, and we will set that meeting up, and then I'll share it with you guys if you guys can't make it to the meeting. Okay. So after that, we go down to our lower time frame. And what do I say here? You hear me talk about it time and time again in all my videos. I want to see confirmation. I want to see opposing pivot point zones being removed. I want to see downward momentum lines being broken. I want to see 2 to 1 move away. I want to see a good, strong quality zone, right? Every trade has these certain characteristics because it makes a good trade a higher probability trade, right? That's all we are trying to do. We are probability based traders. I don't care what methodology you are trading, how you look at the markets. We are probability based traders, whether you are a long term looking at fundamentals or technical analysis. So here on this trade, we broke the lower low, lower high, removed all these opposing pivot point zones, and we have a very nice quality drop base rally demand zone back down in here. Okay, simply place my stop, kind of like a structure stop below it, and I got out at a 1.5 to 1 up here. Ideally, I was going for like a 2 to 1 something up here, but it was way above already the daily 14-day average true range for the day. And I was like, okay, I'm getting out of this because I think it's going to pull back for the next couple of days. And I just don't want to eat these swap fees and commission fees. So that's why I got out of the trade. Yeah, I could have made 25% more on it, but hey, you know what? It's cool. I like gold, and I'm personally not a big fan of swing trading, so I'm just going to get in, going to get out, right? But here it is, break downward trend, remove opposing zone. It's the same top-down analysis, right? And so this is why I think having this meeting with you guys would be really good. Let's look at this one. This was another trade. This was a losing trade. This was on Dow Jones. So this is a smaller time frame, 460. Oh my gosh. I'm telling you, the tool that I use to click and draw, and so I can do this, they updated it, and I hate the update that Microsoft did to this tool. It doesn't blow it up as large, and it's more fidgety. So in this case, we started with the higher time frame, and I noticed kind of overall the last week, 2 weeks, the stocks have been getting crushed. So I was like, okay, you know what? It's making lower low, lower highs on the 1 hour, on the 4 hour. Prices came back up into this whole area, not really supply, but kind of like lower low, lower highs, like 4 hour structure of where prices are making these new lower lows on a higher time frame. And so prices were coming back up into this area over here. And I was like, okay, you know what? It's made its correction move. I think we can time our entry now to be looking for a selling opportunity. It's also reacting off of the 200 moving average. So it makes sense for me to start looking for selling opportunities. Okay. So that was my higher time frame analysis. And I went down to the 5 minute to time my entry. And same thing that I always mention in all my trade setups. I want to see confirmation. Here we have higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, right? Followed by a big strong move to the downside. The first trade setup would have actually been, let me remove this, erase, erase. The first trade setup actually would have been right here, but I missed it. This is kind of like a confirmation 2.0 trade setup that we call, and it's a pullback into the original zone as long as it made a new quality scoring zone that made a new low, basically. So this would have been the first trade that would have worked out really well. But the reason I got kind of in on the second pullback is because we made new lows, because we broke that momentum line, removed the opposing zone, then we continued to make a new low. So that's why I was trading at that new zone, hoping that, okay, prices will take it down lower. Unfortunately, it didn't work out, and I ended up losing the trade. But every zone has the same thing: momentum break, strong quality zone, right? We remove all this drawing here, guys. Not much time spent there. Big, strong move. That's telling me a lot of sellers came into the market, breaking trend, higher time frame analysis. We are trying to build a case of why one thing might happen over another. Okay. And then something I'm keeping track here to myself that hopefully I can share with you guys in time is because a lot of people ask me, like, hey, why do you have this indicator here on this time? Why are you adding this note? I'm just keeping track of this stuff so that when I do a 3 month review or a 6 month review, I can go back and say, like, is there a difference between my winning trades and my losing trades between the first 30 minutes of the open while the market's at its highest volatility and liquidity versus say after the first 30 minutes, right? So this is just kind of stats that I keep track of. And this is why journaling is so important. So hopefully when this video gets to over 80 likes, let's push for 100, you guys. We can do this group meeting with each other where we can look at your trade reviews, we can answer your questions, and we can sit there for 2 hours. I don't care how long it will take. I'm not going to try selling you on anything to make it some selling call. I'm just trying to provide you guys with as much value as I can. So we are going to end it here. I appreciate if you guys like the video, subscribe. If you guys have any questions, let me know in the comments below. And you guys can always reach out to me on social media at Moneyball Austin. I will see you guys next week and in the private meeting that we are going to have. Thank you guys so much. Bye bye.